Good afternoon. My name is Richard. I'm working with Sancus Systems. We are a blockchain technology consulting firm. We help integrate blockchains into everyday processes of individuals and businesses to save money through process automation, data security improvement, and regulatory compliance facilitation with the blockchain. We're going to be doing a daily podcast here about blockchain technology and smart contracts, talking about initially how they're impacting the world relative to this economic collapse we're in and relative to the coronavirus pandemic. Today we'll be talking about things like the Bank of International Settlements pushing for central bank digital currencies, how Oracle and IBM are working with the World Health Organization to help spread data and effectively combat the coronavirus. And we'll be talking a little bit about potential bank runs. FDIC's urging people to not withdraw cash in light of some bank closures and some liquidity issues. So let's get started on the Bank of International Settlements. So, the bulletin published by the BIS, a 600-member international financial institution, urges central banks to consider developing central bank digital currencies in light of concerns regarding the spread of coronavirus through existing payment methods. So their idea is that with cash is being handed back and forth all day, and if somebody's sick, handles the cash, then they put the virus on the cash, which then goes on to spread it to everyone who's handed off that paper currency. The push towards central bank digital currencies has become apparent with the EU creating their own digital euro, a blockchain-based euro, and already beginning testing through France's central banks this month. And two separate bills went to Congress in the past couple of months asking the US to build and implement a blockchain-based digital dollar. Central bank digital currencies are like bank cryptocurrencies. They take a regular fiat currency, like the dollar or the euro, and they give it a blockchain backbone. Now, while this doesn't give the decentralization or scarcity benefits a currency like Bitcoin has, this does give some cryptographic security benefits and a bit more transparency and ease of audit regulation, if the banks were ever to be audited, that is. The pretense for this is that cash is dangerous because it's used to spread the virus, but I take a different stance. I see this more of a Bretton Woods 2.0. During the last Great Depression, and yes, I say the last Great Depression because we are in another one, the banks had literally invented fiat currency to bail out the markets. This time around, it seems like they're going to be reinventing fiat currency in a new, attractive, and slightly more secure way. Central bank digital currencies open up massive possibilities in terms of automation. Minting the currency, regulatory oversight, distribution, and automation of financial processes dealing with these new digital currencies are suddenly open to massive automation possibilities. When these currencies take a firm foothold as the new standard globally, in the US and other countries, we might even be able to automate entities, completely automate entities, like the Treasury and the IRS, saving massive overhead, saving massive taxpayer dollars. It's the 21st century. Why not? We need to work smarter, not harder. So, next we're going to be talking about how the FDIC announces the first coronavirus-fueled bank failure in the United States. A financial institution in West Virginia is officially the first bank to go under due to the coronavirus pandemic. I feel like this can be a somewhat misleading headline, because according to the FDIC's site, there have been about 559 bank failures between 2001 and 2020, a majority of which stem from the 2008 financial crisis. These bank closures are not new happenings by any means, but if 2008 taught us anything, it's that in global recessions or depressions like we're in right now, the banks are hit hard. The writing, however, is on the wall. The Wall Street Journal article talks about how some bank branches run low on cash as customers make big withdrawals, prompting regulators, news outlets, and even the FDIC themselves to come out and urge people to give the banks liquidity by leaving their money in the banks. They assure everyone that the FDIC $250,000 insurance policy will be more than adequate if the bank runs happen. What this insurance policy doesn't cover is the devaluation of the US dollar through massive dilution of supply. Over $7 trillion has been printed and pumped into the economy since January this year. That's about 1/3 of the total national debt of the US, printed in about 3 months. For scale, for reference purposes, in 2008, the banks got away with bailing out the economy, the economic crash of 2008, with less than less than $1.5 trillion. That means that we've printed over four times that in 1/4 of the time, because that less than 2 trillion in 2008 was pumped in over the course of a year. In 1/4 of the time, we've printed more than 4 times the money, and we're still seeing a crash. We're still seeing the Dow Jones and the S&P tanking, absolutely hemorrhaging in value. People understand, it seems that people are starting to understand that when you just shovel money into the furnace, that it has repercussions on the value of the currency being printed. All the printing has little to no effect from what I can tell if I look at the 3-month graphs for the US Wall Street 30. What does this have to do with blockchains? Well, this kind of liquidity crisis, this kind of devaluation of currency through overprinting, is exactly what prompted Bitcoin to be invented in the first place. Bitcoin was born from the 2008 financial crisis and was built to hold against these kinds of situations. With Bitcoin's 21 million total cap on currency, you can't just print more Bitcoin. You can't just devalue the currency by flooding the market with trillions of them. And the same can be said for most other cryptocurrencies. The true test of being resilient in this crash will be seeing what Bitcoin does in the very depths of it. Just as gold fell in 2008, Bitcoin is falling at the beginning of this crisis. It's early in the situation. To say that Bitcoin will not hold well in the heat of this situation is to not give it enough time. The same was said about gold in 2008 when the initial gold crash began, and then as the economy started to recover, that is when this resurgence in power and price flooded into gold. And this is when Bitcoin was born. So once we really hit true depths in this crash, we will get to see what Bitcoin really does in a financial depression. We're not off this ride yet, folks. Even the baby boomers are starting to catch wind of things. Robert Kiyosaki, author of Rich Dad, Poor Dad, recently tweeted in favor of Bitcoin. He says, "Death of dollar. People desperate for money. Very sad. If government gives you free money, take it and spend it wisely. Do not save. Buy gold, silver, and Bitcoin." When even traditional investors begin seeing and exclaiming the functionality of Bitcoin in a depression like this, it shows that public sentiment is shifting against fiat currency and towards more stable, more secure options. On the coronavirus front, we're seeing IBM and Oracle working with blockchain tech to help track data and share data about the coronavirus between organizations. Here we see the World Health Organization teams with IBM and Oracle on blockchain-based coronavirus data hub. The solution, dubbed MyPasa, is launching a COVID-19 information highway, said Jonathan Levy, CEO of Hasera, the company that built the platform. MyPasa, built on IBM's Hyperledger Fabric, is expected to evolve as a range of data analytics tools are added, followed by testing data and other information to assist with the precise detection of COVID-19 infection hotspots. We feel that there isn't enough information out there to make informed decisions, said Levy. How can we help all the people that would like to get access to data, analyze it, and provide insights? The secure database structure and ease of permissioning and sharing sensitive data between parties is something blockchains excel at. These systems allow for HIPAA-regulated storage of data and provide a means of both storage and communication of this protected info. In a time when the virus is rampaging as it is, we need to use every tool in the shed to fight it. It seems that the efficiency and the safety of blockchain technology have never had as strong of a market incentive or need to be used as it does today in the light of this global pandemic. Lots of data tool providers are getting involved. Everybody is rushing to help and nobody is charging a cent, said Levy. This is the blockchain community in a nutshell, folks. When motivated, they push towards heights unbound, and they do it for the greater good. Thanks for watching our first podcast, folks. The donation link is above me if you enjoyed the podcast. We'll be doing these daily on top of our other presentations. I'm going to be posting an event calendar in the description below. If you have any more questions, or if you're interested in using blockchain technology to make the business processes in your life more secure, less costly, and give them a wider market reach, visit us at sancus.systems. I'll put the link below. Let's connect your world to the blockchain.